Welcome to She Sees Profit, the channel where we break down trading concepts with clarity, confidence, and intention. No hype, no confusion, just understanding how the market actually moves so that you can trade smarter, not harder. Let me tell you a real life truth about progress. Anytime something moves fast, your career, your income, even your confidence, it never goes straight up. It pushes forward, then it pauses. And that pause, that's not failure, that's a retracement. Think about getting a raise. You don't quit your job the moment your check increases. You adjust. You rebalance your spending. The market does the same thing. When price makes a strong move up, it doesn't collapse afterward. It pulls back to see where support still exists. That's where the Fibonacci retracement tool comes in. When I pull the Fibonacci from the swing low to the swing high, I'm not looking for magic numbers. I'm looking for areas where buyers are likely to step back in. The 382, the 50, the 61.8. These aren't random. They're zones where the market says, okay, this is far enough. If price pulls back into one of these levels and holds, that's a healthy pullback, not a reversal. Now, here's where most traders leave money on the table. They get into a trade, but they have no plan to get out. Fibonacci helps with that too. When price starts moving back in the direction of the trend, the prior high becomes your first logical target. And Fibonacci extensions give you realistic take profit levels instead of emotional guesses. You're no longer hoping price goes higher. You're planning for where it likely pauses. Here's the part that separates guessing from strategy. Fibonacci works best when it lines up with something else. A previous support level, the bottom of a price channel, a moving average, or a key session high or low. When multiple tools point to the same price area, that level matters. That's called confluence. And that's where high probability trades live. Now, let's talk about warning signs. In a strong uptrend, price usually respects the 38 or 50% retracement. But when price starts pulling back deeper towards the 61.8 and struggles to move higher, that's the market telling you something has changed. And if price breaks below that level and fails to reclaim it, that's often the early stage of a trend shift, before the breakdown everyone else waits for. Fibonacci isn't about predicting the future. It's about measuring how much of a move the market is willing to give back before deciding what's next. And when you combine it with structure, trend, and context, you stop reacting to pullbacks and start understanding them. This is how she sees profit. Now, let's jump on the charts and I'll show you how to use the Fibonacci retracement tool. All right, guys, so we're on the chart and I'm going to show you how to use the Fibonacci retracement tool. So I have a random futures instrument. This is the E-mini Russell 2000. I do not trade this. I'm not familiar with this. However, I'm using this for the purpose of showing you that the retracement tool can be used on any instrument across the board. Okay. So the first thing you want to do is you want to make sure that the market is trending prior to using this particular tool. This is the point of making sure that you reach the retracement at the beginning stages so that you can have the optimal trade, okay? So I'm going to grab a ray just to kind of show you that the market is trending up, okay? We are actually going to plot in this particular area. Of course, price continued to go up a little bit, but for intents and purposes of this explanation, the uptrend is right here at this time, okay? So that is to confirm, okay? I'm going to go ahead and remove that. I'm going to grab the Fibonacci tool. I'm going to put the magnet back on. And the reason why I like the magnet on the Fibonacci tool is because when you are accurate and you keep everything accurate, especially on your fib, it helps you with that TP. Let's just say you drew it randomly and it wasn't exactly spot on. That's okay sometimes. However, you don't want to be that frustrated person to where you don't draw it accurately and it just goes almost to your TP and turns around. So we want to avoid that if possible. So I'm going to drop this Fibonacci tool on my low, which is here. I'm going to drag it up to the high, which is right here. Okay. All right. And so if you notice, price went up, it retraced to the 618, and then it ultimately went to our 618, our negative 618. Okay. If you notice, my fib is color coded. And what that means for me is I'm looking for where price retraces to. And then when it goes back, I want it to hit the same color code on the other side of the fib. Now, as we talked about earlier, the first TP is going to be your previous high, right? So this is where you should set your first TP, and then these are subsequent TPs. Okay. Ultimately, we see price hit that level. However, for our first TP, we want to take it to the previous high. Okay. Now, keep in mind, when price retraces, if you'll notice, price retraced past the 618 toward the 786, but it did not touch the 786. So the retracement is considered where price touched. Even if it had got, let's just say it got a little further down here, if it did not touch this line, it is still considered a 618 retracement. Okay, so I hope that helps. All right, so that is an uptrend. Let me give you an example of a downtrend. Let me slide over a little bit. Okay, we have a downtrend here. Let's see here. All right. Now, I'm going to grab the fib for the downtrend fib. And so what I see here is I see a high. We're going to plot that, and we're going to drag it down to the low. This is the low, okay? What do you notice? You will see that price went down, it retraced. This time it only retraced to the 38.2. And that's very important to understand. You need to take time to study your instrument, whatever it is, to know where it is most likely to retrace. Is it normally the 382? Is it the 50? Is it the 618? Does it behave differently on a news day? Those are the things that you're going to have to study and understand about your instrument so that you're not caught off guard. Okay. So in this particular instrument, again, I don't trade this. This is not something I'm very familiar with, but I did want to use it for this explanation. So in this particular example, price only retraced to the 382. However, because it is red color coded, we do see that ultimately it went down to the negative 618. Okay. Again, this is your first TP, okay? These are subsequent TPs, okay? So this is an example to show you that the Fibonacci tool works both in the uptrend and the downtrend, okay? And if you notice, this is the end of the uptrend, and this is the start of the downtrend. Fibonacci tools are great for helping you get in at the beginning of a move, okay? So I hope this has been helpful for you. If you found it helpful, please don't forget to like and subscribe. If there's something that you would like to see, some content that you would like me to review, I will be more than happy to do that for you. Please just leave me a comment, and I look forward to hearing from you. In the meanwhile, this is She Sees Profit, wishing you profitable trading.
Trading doesn't have to be complicated. You just have to prepare for the move before the move. If you like this content, don't forget to like and subscribe.